Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 21st of March 2020 and we're publishing our gold and silver weekly update for the week ending the 20th of March. Gold fell $31 last week from $1,529 to $1,498, having hit a high of $1,572 and a low of $1,451. A fall of 2%. In sterling terms, gold finished the week at £1,286. That's up £40. And in euros, it closed at €1,391. That's up €19. With gold falling in dollar terms and rising in sterling and euro terms, just shows how strong the dollar has become this past week over these two currencies. Now, silver fell $2.15 from $14.74 to $12.59. Another $2 plus fall, a near 15% decline, having hit a high of $15.11 and a low of $11.66. Like last week, another $3 plus spread between highs and lows. Now, in sterling terms, silver closed at £10.81. That's down £1.21 or just over 10%. And in euros, it closed at €11.70. That's down €1.53 or just over 11.5%. The gold to silver ratio rose from 103 to 1 to its now current 119 to 1. Having actually touched 124 to 1 earlier in the week. The Dow Jones closed on Friday at 19,173, down 913 points on the day and closed below that psychologically important level of 20,000. Not only has it fallen 913 points on the day, but it's down a considerable 4,012 points on the week. And this follows last week's fall, or the previous week's fall, of 2,679 points. The Nasdaq closed at 6,879, down 271 points on the day, and down 995 points on the week. And the S&P 500 closed at 2,304, down 104 points on the day, and down 407 points on the week. So across these three bourses, we've seen falls of between 3.8% and 4.6%. These major falls and rises experienced this past week simply goes to show how fragile and volatile investors are feeling at the moment, almost reacting somewhat abnormally to any news, comment or announcement. But there is undoubtedly an overall downward trend. Now, Brent crude closed at $26.98, down $6.87, and this follows last week's fall of $11.42 on the week. And WTI crude closed at $22.63, that's down $9.10 on the week, following the previous week's fall of $9.55. The dollar index stands at 102.8. up 4.05 on the week, and that is following last week's rise of 2.8. We would not be surprised to see further strength at some stage, though we have to admit it is beginning to look a little on the high side, even for our tastes now. Now, last week we produced quite a number and range of videos each day, updating our subscribers to what is happening and how the markets are reacting. But the big news really for the week, from a practical perspective, is the considerable rise in silver coin premiums and the lack of availability of silver or gold coins from dealers and bars, unless one is prepared to pay unacceptable premiums. And even then, supply is limited. Even European buyers who purchase from companies like silvertogo.com, who traditionally are very reasonably priced, because of favourable VAT treatment, are either desperately short or are also charging very high premiums. Now, we have come out quite strongly refusing to pay these premiums. And you may very well ask yourselves why. Because we're not convinced that silver is going to rise in price high enough to cover them in the coming months. Maybe long term, but not in the coming months. And if some geopolitical situation should arise, which does cause silver to go through the roof, we suspect it will be of such a consequence. We all may have other more important things on our minds rather than buying or selling silver, such as buying food, medicines, and keeping safe. Now, there is no doubt that currently there is considerable demand for silver as a monetary metal, while at the same time a drop in demand for it as an industrial metal. Now, yesterday, because David Morgan came out with a video yesterday, actually, stating basically telling us you cannot obtain silver at spot. Well, we were able to purchase 700 grams of silver flatware, sterling silver 92.5%, for just £200. Now, of that 700 grams, approximately 150 grams, the knife blades, is stainless steel, and so we have 550 grams of 92.5% silver for £200. This is an effective rate of 39 pence per gram of 999 silver, including postage. The spot price of silver is just shy of 35p a gram, so we have paid a premium over spot. So Morgan's right, perhaps you can't get it quite at spot, but the premium is 11%. Higher than we'd like to traditionally pay. But when you compare that to, say, one of Silver to Go's cheapest coins at the moment, the 1 ounce Krugerrand, which has literally just come off availability and you have to wait 2 or 3 weeks, which is currently just over £19 per ounce plus postage, you are looking at a premium of over £8 for 1 ounce, which represents 74% over spot. Now, whilst we certainly accept that the coin is more attractive and possibly more easily saleable, is it really worth paying a 74% premium plus postage when you can pay an 11% premium including postage? Now, don't misunderstand us. If we had 0 coins ourselves and were worried about an Armageddon situation, then yes, perhaps we may be tempted. But as we have coins already, and we're just looking to capitalize on low prices, it really does not make sense to pay 70% plus premiums. Just spend your time foraging for deals and bargains at auction sites and pawn shops and anywhere which may sell items consisting of gold and silver. Some retailers may be in a desperate situation to make sales because of overheads. And whilst we do not believe in exploitation, the current situation does present a good opportunity if you spend enough time to seek out deals and bargains, which we all know longer term will pay off. Now, if you believe that the economy will survive the current depression or recession, then, as we stated in yesterday's video entitled Market Update and Should We Trade Paper, Gold and Silver, and you are comfortable with the company in which you're dealing with, and in our case it would be Bullion Vault, or we'd go direct onto the SLV, or a similar organization or platform, then this may be the easiest and best way to capitalize on low prices, which we all believe will go higher in time. So, talking about higher prices, let's take a brief look at what technical analysis tells us. Well, although gold was down for the week, it did attempt a rally on Friday as the dollar index fell back slightly. We reported earlier that the major currencies which were hitting multi-year lows against the dollar, including the euro, which actually hit a 35-month low or nearly 3-year low. Also, job losses, which states are reporting, appeared to be of such a magnitude that already US yields began moving lower. Looking at the gold chart last week, prices whipsawed a term we've begun to use quite frequently recently. However, short-term momentum has turned negative, as medium-term momentum has too. That said, the fast stochastic of 11 is below the oversold, what we call trigger level of 20, which may suggest a correction. So we have slight divergent analysis signals here. Now our view on gold, for what it's worth, is that it will begin to bottom very shortly. It may go down a little further from current levels in US dollar terms, that is, but the recent move towards buying precious metals this past week or so, the physical, does indicate that the public are starting to wake up to what is currently offering excellent value when compared with the alternative investment opportunities, most of which have either already peaked and are on their way down like the equity markets, or still in major bubble territory. This really could be the decade for gold, and we all know that where gold goes, so follows silver, but usually a little while behind. Silver basically collapsed this past week again, and it was quite surprising, even for us, to see it fall below $12, which frankly is where we believed it really should have bottomed. The price did bounce back though, but having tested this low, it may be tempted to give it another go in the weeks ahead. Alternatively, if we see a gold rally, then of course silver will naturally move up in sympathy. Now, on the opposite side, having seen silver trade through $13 on Friday is positive, certainly from a technical point of view, especially as many analysts regard silver now as oversold. There is no doubt there is considerable support at the $12 level, and should silver fall below that again, then the next major support level is $10. But upside potential is around $15, and should that be breached, then we may indeed see $16 silver again, but our view is probably we're more likely to see wild oscillations between really $12 to $14, although there might be dips below 12 and some excessive peaks above 14. This, however, the current situation, presents us with that all-important question which we alluded to earlier. Do you take a counterparty risk and buy silver at or around or below $12, either via SLV or an ETF or companies like Bullion Vault, and obtain prices, quote, close to spot price? Or do you buy the physical, but pay hefty premiums, with the prospect of losing out short-term on a considerable gain? Meaning, quite likely, that you would have to hold that precious metal for a number of years to benefit from it fully from your holdings. Now, only you can make that decision. And we cannot really guide you because each person's circumstance is different. But we will share with you what Greg and I are likely to do. Controversially, Greg will probably do nothing because he construes it all as gambling and, putting it bluntly, has less years to live, with no one other than his wife to leave his wealth to. I, on the other hand, younger and in better health and hopefully live longer than Greg, and also believe that a portfolio should consist of various investment formats and constituencies, really have enough really physical gold and silver for a disaster situation, and so will be looking to make profit by either paper trading or more than likely by investing in gold and silver via companies like Bullion Vault, but companies with a long-standing reputation. Now, as a matter of course, I have not embarked on paper trading gold and silver, as I felt, quite frankly, that it would detract from the ability of one to give purely objective advice or commentary, rather than financial advice. However, with prices dipping to these lows for silver, even I have to sit up and say, and admit that silver is looking remarkably cheap, and although it can go lower, that drop in price will only be sustainable for a certain period of time. Now, I am certainly not convinced that these financial organizations will fail or be allowed to fail. And many are talking about the permanent shutdown or a lengthy shutdown of the stock markets. Those who perhaps follow the financial markets very closely and have an understanding of how they interact will appreciate that only the most dire of circumstances could lead to the falling, or rather the closing, of the equity markets. And frankly, to do so would probably make this economic situation far worse than leaving them open and allowing stocks to fall, because eventually they will find a bottom at which investors will regard them as being cheap once again. So we're not convinced that the financial system is going to fail at this stage, that the major institutions are going to collapse, or that the stock markets will close, other than perhaps for a brief moment, either because people don't turn up, but more likely because of major movements beyond the normal break levels that are inserted. But a closure of weeks or months, we certainly don't see that happening. So, with that view, we feel we can take a risk with companies such as Bullion Vault or similar, depending which country you're in and depending on whom you're comfortable dealing with. And if we were wrong and they did fail, well, we're only putting 15% of our available portfolio into it. Now, that would hurt, of course it would, but it would hurt no more than what one has lost on the equity market of late anyway. In the matter of transparency, this proposed 15% additional exposure will then add to the 10% exposure of my portfolio, which is currently in physical precious metals. So I will move from a 10% to a 25% exposure to precious metals from these low levels over the coming weeks. Now, I'm saying that in advance before actually doing it, which may be a good or bad thing, not sure. Now, we're not suggesting that everyone does this, as it's a high exposure, and as mentioned, each person's circumstances are different. But since setting up this channel, we've always believed from our analysis that precious metals will come into their own approximately 10 years after their original peak, i.e. 2011, or the last peak, 2011, and then run for a number of years as governments prepare for their cashless society and or an economic reset. We did expect the equity markets to hold up, though, throughout 2020, if only because of the manipulation in preparedness for the United States presidential election. And so this recent black swan, which has disrupted proceedings, has of course changed the environment and has brought back the inevitable decline in equities a little earlier than we projected or anticipated. Now, going back to economic data, last week's economic news was generally as per expectations, save two areas. Retail sales were down 0.5% for February, and weekly jobless claims rose from 211,000 the previous week to 281,000 last week. And this trend is expected to continue and increase. Now, this coming week, we have the following data announcements. Monday, a few pieces, but really of little consequence. Tuesday, market manufacturing and services flash PMI for March and new home sales for February. Wednesday, durable goods orders for February and core capital goods orders also for February. Thursday, weekly jobless claims, all eyes should be on this. GDP for quarter 4, forecasted at plus 2.1%. Might be the last positive forecast for a while. And advanced trading goods for February. And then on Friday, personal income, consumer spending, and core inflation figures all for February, and consumer sentiment for March. So we have interesting days on Tuesday, Thursday, and Friday, each of which can potentially affect the markets, which is why we are expecting, amongst other actions, some further volatility. So that's basically it for this week's update. We are expecting gold, and silver in particular, to be volatile next week. Prices should really rise a little, but if the dollar strength continues, then they will be subdued. We're not anticipating any major falls in gold, and more likely a rise of some 2 to 5%. And silver can surprise us and recover up to $1 or so, or we may see it actually breach that $12 support level. Clearly, if you are in a currency other than the US dollar, and the dollar strengthens again against your currency, it is likely that gold prices will rise further, even though the dollar price may remain broadly static or marginally better. For those still in the markets and looking to acquire precious metals, this is clearly a very good time to start acquiring some, but as we have pointed out at length earlier, try and avoid the high premiums if you can, and perhaps buy the metal via a different route. However, if you feel confident that you're likely to hold on to your investment for 5 years or more, then the premiums won't make much difference. Thank you so much for listening. Sorry this is quite a lengthy one this week. And if you haven't already done so, please subscribe to our channel. Press the bell sign so that you're notified of our videos as and when they are published. Not forgetting, of course, that we update our Richard and Greg channel every other day. So if you haven't done so there, please subscribe to that one too. And we provide links to all of these in the description box below. We trust and hope that you have an enjoyable weekend, despite what is happening, and have a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.